to the learning curve. In this video, I'll be reviewing the anticipated or forecasted performance of the global economy, including major economies and economic blocs across the world for 2026. This is a very important report as it has broad consequences for countries and the well-being of individuals worldwide. As a reminder, in calculating GDP or economic growth, the major index that is used to calculate the value of goods and services produced in a given economy in a particular period of time, usually a year, is GDP. And the most common approach that is used to calculate GDP or gross domestic product is the expenditure approach. GDP is calculated as C plus I plus G plus X minus M, and I would have gone into great details in my previous video as to the composition of each of these. But in brief, GDP is equal to the value of total consumption plus the value of total investments plus government spending plus net exports. So X minus M here represents net exports. X is exports, the value of exports, and M is the value of imports. So this is how the total value of goods and services produced in a given economy in a particular period of time, such as a year, is calculated. And this is the main benchmark that is used to calculate the value of goods and services and hence economic growth in a particular year. According to Goldman Sachs, the global economy is forecasted to post steady growth of 2.8% in 2026. This is, however, still below pre-pandemic growth rates in the world. So one could say that the world economy is still in a recovery phase. But there are many threats that I will go through in this particular report. According to Goldman Sachs, this is the real GDP growth forecast for the major countries, the major economies and economic blocs in the world. As indicated, the world as a whole is forecasted to grow by 2.8%, which is the same growth rate as what was recorded for the world as a whole in 2025. The consensus rate, however, based on other experts which have been put forward, is slightly lower than that which has been put forward by Goldman Sachs. The consensus rate for 2026 is 2.5%. So based on this, the global economy is expected to grow somewhere between 2.5 and 2.8% as a whole in 2026. So for 2026, major economies face a slowdown in global growth. Global growth rate will fall somewhere based on the aggregation of a wide range of literature. Global growth is expected to fall somewhere between 2.5 and 3.1% in 2026. It's going to be characterized by a soft landing, cooling inflation, but persistent cost of living pressures and uneven regional growth. Trade headwinds from tariffs and supportive but slowing monetary easing. The US leads with a projected 2.1 to 2.6% real growth for 2026. Among the industrial economies, the major industrial economies of the world, the US is in the lead as far as forecasted growth is concerned, which is expected to be between 2.1 and 2.6% in 2026. While China's growth moderates at around 4.8% amid structural shifts, and Europe struggles with weaker growth. Germany is forecasted to grow at about between 1.0 and 1.3% in 2026. The key drivers include resilient consumer spending, increased artificial intelligence investments, fiscal stimulus, and ongoing supply chain adjustments. These are going to be the main drivers of economic growth around the world in 2026. Now let's look at some economies specifically, some of the major economies listed here in a little bit more detail. In the United States is projected to grow, as I indicated, between about 2.0 and 2.6%, thereabouts. An uptick, slight uptick from 2025, supported by strong consumer spending and fiscal policies, particularly infrastructure investment and investments in artificial intelligence. We expect inflation in the United States to remain above target, though it will be easing a little. The key factors that will be stimulating the US economy in 2026 are strong employment, investments in technology, but facing trade policy impacts such as the high tariffs, it is uncertain as to the magnitude of the overall effect that the high tariff regime will have on the US economy. But at the moment, based on the trends that have been seen throughout 2025, the high tariffs are not expected to have an adverse material effect on economic growth in the USA in 2025. But there's a reorientation of trading partnerships around the world as a result of the changing trade policies and relationships between the United States and many countries. There are several regions of the world where countries are pivoting to form new relationships and new economic agreements, such as that recently signed between a bloc of countries in South America, as well as and the European Union. Over in China, as I indicated, growth is expected to be at around 4.8% in China, driven by manufacturing and exports, which is typically what drives growth in the Chinese economy. But they will be facing some challenges. They will be facing the challenge of transitioning to advanced manufacturing, debt sustainability, and challenges with their aging population. So these are some real threats to the sustainability of growth for the Chinese economy. And let's talk about the euro area and Germany. In the euro area, growth is expected, as indicated here, to be at about 1.3% in 2026. But the consensus, which varies from Goldman Sachs' projection, has the growth of the Eurozone being at about 1.1%. Germany is expected to grow by about 1 to 1.1% in 2026 as well, which is considerably weak. Some forecasts has the German economy growing by as much as 1.3%. But the economy in Germany has been struggling for some time now, especially as the manufacturers in Germany seek to reorient their value chain deals, especially since they have lost or downsized much of their supply relationships with Russia, which would normally supply a large quantity of crude oil and gas to drive its manufacturing sector. They have had to source alternatives, and in some cases, those alternatives have been more costly, and that has driven up the cost of production in Germany. Now, among the key drivers of growth in the Eurozone and Germany will be fiscal stimulus. Government spending will be one of the key tools that was being used in the Eurozone to stimulate growth. But overall, the economic activity in the Eurozone will remain subdued in 2026. As far as inflation is concerned, structurally, low inflation offers more policy space for the central bank. Inflation is expected to be lower as consumer spending gets dampened. And this will create some policy space for the central banks to be able to try and ease quantitative constraints in the economy. For the global trends and risks, the overall outlook is this. As indicated, global growth rate will be expected to be about the same as last year in 2025, but it remains below pre-pandemic averages, and there is expected to be uneven regional growth. Inflation will be cooling globally, but high food and energy costs persist, and this will be squeezing real incomes. As far as trade and investments is concerned, slowing trade growth due to persistent barriers, while investment is subdued except for artificial intelligence related investments. Monetary policy easing continues, but rates remain high, higher than pre-pandemic interest rates. So interest rates in 2026 will be easing somewhat, will be going down to try and stimulate economic activity in many countries across the world. Central banks will pursue some type of quantitative easing, which will make more money available for investment and consumption. But interest rates will still remain, are still expected to remain higher than pre-pandemic levels as the world still continues to recover in the fullest of sense from the effects of the COVID-19 pandemic. Some of the key risks to the performance of the global economy in 2026 are geopolitical tensions such as tensions between Ukraine and Russia, which continue. That war is now in its fifth year. Other tensions between the European Union and the United States, which are traditional allies and close economic partners, among others. There are also risks surrounding sustained trade barriers. The high tariff regime in the United States, for example, poses a threat to trade relations and certainly to the flow of free trade in many parts of the world. Fiscal strains and the possible impact of AI on the job market are certainly things to watch as well. Overall, the global economy in 2026 is expected to have a relatively soft landing scenario with moderate growth, falling inflation, and easing monetary policy. But it will be clouded by trade tensions and debt in some of the world's major economies. As far as businesses are concerned, the focus is going to be on supply chain resilience, data driven strategies, and navigating fragmented consumer segments. So it's going to be an interesting year for the world economy. We expect that there will be continued trade tensions between the world's major economies, United States and China. There are many new economic partnerships that are being formed. India is expected to be one of the big growth economies in 2026. Forecast has India, as indicated here. Forecast has India growing by as much as 6.7% in 2026. So, among the large developing economies, India is expected to record the highest level of growth, outperforming China, which, as I indicated, faces several constraints, including aging population and a major transition to advanced manufacturing. So this is a summary, a synopsis of the global economic forecasts for 2026. Continue to stay tuned for much more as we pay close attention to global economic trends and patterns and how they will impact on the global economy as a whole, how they will impact on individual countries, and indeed the welfare of individuals like you and me. Thank you for tuning in. Remember to like, share, and subscribe as this channel continues to elucidate and to expound and expose knowledge in various fields such as economics, mathematics, statistics, and global economic affairs. See you soon. Thank you.